Hey everyone, this is C Crypto Daily Buzz. Today is May 6th, 2026, and I'm here with the top crypto stories that matter most for investors across Southeast Asia. This channel summarizes the most important crypto news for traders in the Philippines, Vietnam, Indonesia, Thailand, and Singapore, all in one place. Let's get straight into today's three stories. Bitcoin is testing the $81,000 resistance again, and institutional money is doing the heavy lifting. Spot Bitcoin ETFs in the US logged their fourth straight day of net inflows, pulling in roughly $467 million in a single session, with BlackRock's IBIT alone bringing in $251 million and Fidelity's FBTC adding another $133 million. On top of that, Strategy, the largest corporate Bitcoin holder, just reported its first quarter results and now sits on 818,000 BTC at an average cost near $75,500, holding roughly $4.5 billion in unrealized profit. My take is simple. When ETFs and corporate treasuries keep buying through volatility, that's a structural floor forming, not a hype rally. For Southeast Asia investors, this means Bitcoin is increasingly behaving like a treasury asset rather than a speculative trade. But 81,000 is still a heavy ceiling, and rejection here could quickly send price back into the 78,000 zone. So I'd say position sizing and patience matter more than ever in this kind of grinding range. Toncoin exploded over 35% in 24 hours after Telegram founder Pavel Durov announced that Telegram itself will take over leadership of the Ton blockchain. Network fees were cut roughly 6 times to around $0.0005 per transfer, and Telegram is now staking around 2.2 million Ton to become the network's largest validator. Trading volume jumped by around 600%, and Ton's market cap pushed past $5 billion. This story is huge for Southeast Asia specifically. Telegram is one of the most used messaging apps in the Philippines, Vietnam, Indonesia, and Thailand, so cheap on-chain transfers inside Telegram could become a real channel for OFW remittance and small payments. The risk side is equally important. One company controlling validation raises centralization concerns, and short-term RSI is already in overbought territory. So a healthy pullback toward 1.65 is a scenario traders should plan for instead of chasing the green candles. The flip side of this rally is leverage. Over the past 24 hours, Bitcoin perpetual futures saw roughly $149 million in forced liquidations, and around 92% of those were short positions getting wiped out. Ethereum added close to $50 million in liquidations, and ZEC alone took nearly $47 million. In plain language, this is a classic short squeeze. Too many traders bet against the rally, price grinded higher, and exchanges close those positions automatically. For Southeast Asia traders, especially those using high leverage on Bybit, Binance, or local platforms in Vietnam, the Philippines, and Indonesia, this is a clear warning. Short squeezes feel like easy money on the way up, but the same leverage cuts both ways the moment price reverses. My honest read is that with funding rates resetting and open interest still elevated, the next sharp move in either direction can liquidate longs just as quickly. So reducing leverage size, taking partial profits, and using firm stop losses is not optional in a market like this. Survival first, return second. That's the simple rule I follow for this kind of choppy, leverage-heavy environment. Quick recap of today's three stories. 1. BTC tests. 81K. ETFs buy. 4 days straight. 2. Telegram takes over. Ton. Coin surges. 36%. 3. 149 MERS BTC liquidations. Short squeeze warning. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. Chart analysis and trading insights, join our free Telegram channel, link in the description. See you in the next one.